So far as the Reserve Bank is concerned, we have identified high inflation as a major risk to macroeconomic stability and sustainable growth. Accordingly, our monetary policy remains resolutely focused on aligning inflation to the 4% target on a durable basis.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
The MPC observed that the recurring incidence of large and overlapping food price shocks can impart generalization and persistence to headline inflation. Economic activity, on the other hand, has remained resilient. Taking into account the evolving inflation growth dynamics and the cumulative policy repo rate hike of 250 basis points, which is still working through the economy, the MPC decided to keep the policy repo rate unchanged at 6.5% in this meeting of the MPC.
The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully.
In contrast to global trends, domestic economic activity exhibits resilience on the back of strong demand.
Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations.
We remain vigilant of the evolving inflation dynamics. I would like to emphatically reiterate, let me repeat, I would like to emphatically reiterate that our inflation target is 4% and not 2 to 6%. Our aim is to align inflation to the target on a durable basis while supporting growth. Our commitment to ensure financial stability reinforces our emphasis on price stability and anchoring of inflation expectations.
Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go.
Headline inflation is easing but rules above the target in major economies. While major central banks are signaling a peaking of their rate hike cycle, there are indications that the tight monetary policy stance could persist for longer than anticipated earlier. Sovereign bond yields have firmed up, the US dollar has appreciated, and global equity markets have corrected.
Broader financial conditions situation and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time.
If you like the video, do like, comment, share, and subscribe.